Hello there, everybody. In this video, I'm going to go through tax return number two's first question, the return that was dealing with Reba Dixon and her daughter. I think this is a really great problem that brings together a lot of the concepts that we learned throughout the first 8 or so chapters of the course. So a lot of those introductory basic concepts, which maybe aren't super difficult on their own, when you kind of bring them all together to try to fill out a return, can be quite challenging. And I like the way that Connect actually walks you through this process. We're going to look at kind of some of the conceptual ideas behind what's going on with Reba's personal tax situation. Then we're going to take that information and actually use it to fill out a return. So we've all gone through this problem. If maybe you didn't do so well in this problem or you don't remember the details, it might be a good idea to pause the video and just go back into Connect and kind of review your work, then just maybe come back and take a look at the video. A lot of the questions that we have in this particular problem kind of have to do with investments. So we have some income coming in from corporate bonds. Reba has also some municipal bonds. We have different forms of income coming in from rental income versus salary. And we have some expenses associated with creating that rental income. So these are all different issues with the way our income is earned and how we're going to display that on the tax return. We also have some questions of what's deductible, questions in terms of credits that we could take. So there's a lot of really fundamental tax information that's incorporated into this one problem. So let's jump into it. I'm going to come back and forth to the facts of the problem. I'm not going to read through the whole thing right now. I encourage you to go back into Connect and kind of review this. But I will be coming back and forth to some of these details. So first thing we're trying to do in part A of the problem is have a theoretical understanding of the different kind of ways that income is recognized and the way that we can take deductions and claim credits. And notice this is the answer key for that first part. We haven't done anything yet with the tax return itself, but we're going to use the numbers from this kind of theoretical understanding to fill out the tax return. So a lot of the problems we've done on our homework assignments with the multiple choice stuff will kind of focus on any one of these individual concepts we might find within this return. And now we're kind of bringing all those ideas together to actually figure out how much money this individual owes or how much she's due to get back. So first thing we're going to do is look at gross income. We're looking at all the different sources of income that Reba has, and she has kind of a somewhat complex stream of income, a couple of different places where she's getting money. A lot of returns you might just have a person who has a salary. So that's their income and there's nothing else. That's a pretty simplistic, easy return to do. We got alimony in this case. We have rental income, a lot of different sources. So we got to figure out what are we going to include as gross income. Well, her total salary from teaching was $38,000. If we come up here, we see that was the first piece of information we got. She also got $1,200 in alimony each month from her former husband. So that's kind of problematic as to how we're going to deal with that on a tax basis. Does she claim that? Does he claim that? So we'll kind of walk through that. And she also got $50,000 in rental income, but had $19,500 in expenses. So notice the alimony, she is going to include that in her gross income. So this is one of the rules that we looked at throughout the course, not only alimony, but also child support payments. And those two differ in that it gets a little confusing. So I wanted to go through and kind of review that. Her husband's paying alimony, and there's rules that regulate what's actually constituting alimony. In this case, it's part of the divorce decree. He doesn't live with her. It meets all the different qualifications that it is an alimony payment. So from her perspective, the person that gets the alimony, who receives the payment, they have to include that as part of their gross income. Now, kind of a related point is her husband, who paid this amount, the $14,400, he doesn't have to include that. He'll get a deduction for that. All right, so that doesn't have anything to do with her right now. She just has to worry about her tax return. and she's going to include that $14,400 because it's alimony. Now, if he was paying child support as well, she would not include the child support payments as gross income, although he would include that in his gross income. He doesn't get a deduction for the child support payments. All right, so it's alimony to the receiver. That's going to be included in gross income. The income that we earn from renting out this apartment building, the $50,000 a year, that's also income. So that's part of gross income. Gross income just means everything that's going to be included in our taxable income. We'll see not quite everything that we earn or make is part of the taxable income. Disability insurance, that's included in there, so that's $1,200. Now, notice this is a key point here, interest payments. If we earn interest from a corporate bond, this $2,200, that is taxable. That's taxable interest. All right, but remember, municipal bonds, and those are bonds issued by local cities typically, those are tax exempt. All right, so we did have an amount coming in from the bonds. Notice we had $1,500 in interest from City of Denver municipal bonds. Well, we don't have to pay tax on that income. So notice that's why we have a zero right there. Even though we did have interest from those bonds, none of it's included in gross income. That's a special provision under the tax law. Basically, it's in place to help cities raise money more easily because investors are now they'll be more attracted to buying those cities' bonds if they don't have to pay taxes on them. So that's a little perk the government, the federal government uses to try to help city governments finance their own operations. But from our perspective, we just need to keep in mind we don't include that in taxable income. And notice if we add up all those different items, we have $105,800, all right, in gross income. And then we deduct the expenses for the rental property. Those are deductible business expenses. And we didn't have to fill out the schedules to do that in this case. We didn't have to fill out the schedule for our itemized deductions either, which we'll be talking about in a bit. But those will be part of the real process of preparing a tax return. We're kind of going piecemeal, step by step, working through the process here. So we didn't have to actually fill out those schedules, but we did need to do the calculations that would be included in the schedules to get our amounts for the returns. All right, so notice this is a key number in any tax return, your AGI. It's just your gross income minus any of those 4 AGI deductions, and this is going to be the number that shows up at the bottom of the first page of that 1040 and at the top of the second page. So this is the 86,300 number. We'll kind of be referring back to this number for other calculations here soon. So key number, the AGI, to keep in mind when you're working through your tax returns. Now we're trying to figure out, do we want to take a standard deduction or do we want to take the itemized deductions? So we have set amount of standard deductions. We learned about this earlier in the course, depending on what filing status we have. So the first thing we need to figure out for Reba is what type of filing status. Well, she's not married anymore, so it's not married. She's single, but would she take the single or the head of household? That's the real question here. Notice she has a dependent who resides with her, who she's taking care of. So she does have a qualifying child. And remember all those different rules we talked about with qualifying children versus qualifying relatives. I think our answer key kind of summarizes that here for Heather, Reba's daughter. Notice she meets the relationship test. She is a daughter. We're trying to figure out, is Reba a qualifying child? She meets the age test. She's under 24 and is a full-time student, okay? She meets the residency test. She lives in the same residence. And support, all right? Heather does not provide more than half of her support, all right? So she meets those 4 tests. She is a qualifying child, all right? So that information, all right, that dependency information allows us to get that head of household qualification. So we are qualifying as filing as a head of household. So notice we get a $18,000 standard deduction for head of household filing status. If we filed as single or a different status, our standard deduction would be different. All right, so the question here is, does Reba have enough itemized deductions that's going to take her over and above, all right, that $18,000? If she does, she'd rather take the itemized deductions as opposed to the standard deduction. So that's the key thing here with these deductions. You get one or the other. You could claim the standard deduction. All right, in this case for Reba, it would be $18,000, or she could choose to claim her itemized deductions. All right, well, we're going to take whichever one is larger. So we know what the standard deduction is. It's $18,000 in this case, or our itemized deduction is going to be greater than that. So we have a couple of different things that qualify for Reba as itemized deductions. If we go back to the information that we're given here, we could see that she paid $5,800 in state income taxes, so that would qualify. She had $12,500 in charitable contributions. Those qualify as itemized deductions. And also medical expenses qualify, but there's special rules that govern how much of our medical expenses can qualify and what particular expenses qualify. So notice Reba made a list of all of her medical related expenses that she thinks maybe would qualify as medical deductions. And all of them do except this one here. Non-prescription medicine does not qualify. So that $100, that can't qualify as part of our medical expense deduction. Now remember the rule though, that we take the total of all of our medical expenses and we subtract an amount equal to 7.5% times that AGI number that we talked about earlier. And we subtract those two amounts. And that computation, that calculation is going to give us the amount of medical expenses we can actually include as part of our itemized deductions. So if we worked out the math for that, notice these were all, I listed out all the different possible medical expenses she had. It came to $75.45. Keep in mind that 100, we're not going to include that. So out of that $75.45 total on the list, $74.45 are possible expenses that could be included. Now notice we can't include that total amount as medical expenses. Remember, it was that total amount of eligible expenses minus 7.5% of AGI. Well, we know our AGI here from a little bit earlier was 86,300. So what I did in Excel, you can see this formula here. I just took 86,300 times 0.75. That's where I get that 64.73, and we're just subtracting those two numbers. So the 74.45 minus 64.73, that's how we get that 972 in medical expenses. So that's a little bit of a complicated process there to figure that out and to get to your itemized deductions. So I think that's an area where some people had issues. So just keep in mind, that's a very special case. When we have medical expenses, they're handled differently than like charitable contributions or other items that are included in our itemized deductions. And notice we have the list of those different deductions here. So the $12,500, the $5,800, and then the $972. So we add those up and we'll see what that comes to here. Sum that list up. So those are three expenses. All right, it comes to $19,272. Okay, and that's exactly what we got down here, $19,272. All right, so that was just those three categories of itemized expenses. Again, the $5,800 in state income taxes, the $12,500 in our donations to charity. Notice we include those total amounts, and then we had to go through the whole special process to see what is actually a legitimate medical expense, and then what amount of those expenses could be included based on our AGI. All right, so that was probably one of the tougher parts of this project, getting that 972. Notice though, once we do that calculation correctly, our total itemized deductions of 19,272, that's greater than 18,000. So we want to use the itemized deductions and not the standard deductions in this case. All right, so that's why this little drop down, we could have picked either. All right, we want to go with greater of itemized or standard. And we do that, we have the 19,272 being used. All right, so basically we're taking the 86,300, our AGI, subtracting our 19,272 in deductions. We have taxable income of 67,028. So at this point, we've gotten through a lot of the process. We just need to calculate our tax, figure out what our credits are, and that'll determine what we owe or what we're due back in a refund. So notice this, the amount of tax, we could find this from our tax schedule. So they gave you a little link here. If you click there, notice we had $67,028 in taxable income. We go here, so there's different schedules based on our filing status. Well, we know we're head of household. We talked about that already. And we're going to be in this area here between $51,800 and $82,500. That's where our number falls. All right, we had the exact number, $67,028. So we'll be between those two numbers. So we take $59,444 plus 22% of the excess over $51,800. So I'm not going to run through the whole calculation, but what you would do is take that $60,000 and change. All right, subtract $51,800. You take 22% times it, and then whatever that number comes out to, you add $59,444. So we've done a lot of different problems in the earlier chapters with basic tax calculations. If you have any issues with that or don't understand how to work through that process, please let me know. I'll go through an extra problem explaining that. But I just really wanted to point out where you go to find that information. All right, so the 9294, if you're using like H&R Block software or some other type of software to do these calculations, it'll automatically calculate that for you behind the scenes. I just want you, for the sake of this course, to know where those numbers are actually coming from. Now, our credits of $1,000, this comes from two places. All right, we had the child tax credit of $500, and we had an education credit of $500. So notice up here, Reba paid a portion of Heather's college expenses. She paid $500 because she is Reba's dependent. That $500 is eligible for an education credit, so we have that $500 credit. We also have another tax credit just for the child tax credit, but it's limited, so it was a special case. And I believe our answer key talked us through the details here at one point. Here we go. Reba can claim the $500 child tax credit because Heather is a qualifying dependent, but she's not under 17. If Heather was under 17, Reba would get $2,000 for this credit. This is a change in the tax law since last year, but since Heather is over 17, Reba only gets a $500 credit. So we had two separate credits for $500 each. That's where that $1,000 came from right here. And we'll see when we actually fill out the tax return. There's different areas where each of those credits is going to be housed. So throughout the year, we had $10,000 in taxes being taken out. All right, well, if we look at what our tax is, we look at what's taken out, we just kind of calculate the difference there. All right, we owed $9,294. All right, so we actually took out more than we owed, plus we had a credit. Remember, a $1,000 credit reduces how much we owe in tax dollar for dollar, and in this case, we had refundable credits. So we're going to get actually $1,706 back, even though, all right, the amount we took out in tax is only a little bit more than what we owed in tax. A $1,000 tax credit really helped to bump up this particular return. All right, so notice we had the option to have taxes payable or tax refund. In this case, it's tax refund because we are getting that money back. All right, so that was the basic kind of run through of the theory behind all this. Now the question is, how do we actually put this on the return? All right, so this is our Form 1040. Basically, all the hard work has been done already. We're just transcribing the information from kind of the worksheet we did earlier over here. So notice that $38,000, that was our salaries that we had in there. A key place where people kind of get thrown off here, that taxable income, the income from the corporate bond interest, that comes up here. That's part of gross income, $2,200. Remember, we had zero included, all right, from the municipal bond. So the municipal bond interest isn't going to be added up here to get to the $86,300, but we still report it on the tax return, all right, tax exempt interest. We just stick it here kind of off to the side. That $1,500 we got from the municipal bond interest. Notice that $1,500 doesn't get counted when we calculate the $86,300. All right, our alimony, we talked about the fact alimony is included in taxable income, so that goes right there. Notice this is the net amount of our business rental income. We don't have the Schedule E actually prepared. If we had like different categories of expenses, those will be listed out on Schedule E for our business. And then we subtract those from the total amount of revenue and bring that number over here. So if you're doing a return for a real client, you would fill out that Schedule E, and that would be supporting documentation. I don't believe we were asked for that in this problem, so we were just really focused on the prime part of the 1040 itself for these calculations. All right, so the last thing we had was that $1,200 in disability. And notice that was 80% of the $2,000. I don't know if I brought that up because of the premiums paid. So that $1,200 included in gross income. So all these numbers added up together, the $38,000 down to the $1,200, come to $86,300. Remember, that was our AGI. One thing I wanted to bring up that was a bit tricky, it was a change in the tax laws over the last year, is you used to be able to claim moving expenses if you would be changing one job and go into another if it met certain different requirements. That is only eligible for military personnel as of 2018. So we do have a moving expense line here, but we shouldn't include anything for Reba in this case. She would have been eligible in 2017 for moving expenses if everything happened during that year, but she moved in 2018, so not eligible for this tax year. So this $86,300, notice if we had any deductions or whatnot, they would kind of be down here in these columns, and we'd subtract those from the $86,300 to get our AGI. But since we had nothing here for these deductions, we just take the $86,300 and drop it down here. And we're actually going to take that number over to the second page of the return for the top figure, so that always gets kind of repeated here. Our itemized deductions, remember we did the calculations to kind of come up with that. Typically you would file a Schedule A with those calculations on it. It's supporting documentation. We kind of did that as shorthand already in Part A of this problem or this assignment. So we just brought that number over from there. So the 19,272. Notice we subtract that from our AGI and we get 67,028. All right. And then we have our taxable amount. We talked about how we calculated that earlier. So the 9294. Notice our credits go here. So remember that $1,000 that we had up here that we talked about in total credits, all right, on line 9. We're busting that up now into its individual components. And we got the $500 here. That was the education credit for paying for Heather's school. And we got the $500 for the child tax credit. Remember, that was limited because she's not under the age of 17, so Reba wouldn't be entitled to the full $2,000 that some parents could get if their children were under that age. So those two credits together are $1,000. That's where this number's coming from. So we had $92.94 in taxes owed. Notice that $1,000 reduces dollar for dollar how much we have to pay. So total owed in taxes is $82.94. And notice credits differ from deductions. A deduction would reduce our taxable base. All right, deductions are not typically as good as credits. So we'd rather get a credit than a deduction, all other things equal. All right, so we got the $82.94. Notice we paid $10,000 to Uncle Sam throughout the year. Well, we only owed him $82.94. The difference is our return. All right, we're due back $1,706. Always remember to fill out the signature if you're the preparer. You want to put your name and your signature there as well. Another key thing I didn't talk about, I was more focused on the calculations and understanding where the numbers came from for this video, but always be careful to fill out all this kind of personal background information. Make sure you include the name and the current address. We have head of household, so we talked about how we selected that. Make sure you check that on the return. We have our exemptions here, ourselves and Heather. Remember to enter their social security number, their relationship. And this is an area where some people get in trouble with the IRS. They'll claim people that aren't actual dependents, or they won't provide the proper information about people that they can legitimately claim, so they might get a nasty letter from the IRS. So just remember to always fill that stuff out. And, I think some of your points for the assignment are predicated upon this information. So those are easy points when you're working through these assignments. So I think this is a really good example to help get your feet wet with working through tax returns. I think going through this is maybe helpful in thinking about future returns, and also helpful in trying to prepare for your final exam. So the final exam won't have you calculate a tax return, but of course it's focused on all these different concepts that we took into account to figure out the individual line items. So reviewing this could be helpful in preparing for the final exam as well. So please let me know if you have any questions or comments about this return, and I'd be happy to answer any questions about the other assignments that we had throughout our course. You have a great day.